Doris. I'm here to share with you about market update. Today, my stock account has made a loss of $935 US. US stocks mixed, closed mix, with the market focusing on the US debt ceiling deadlock. So in my account today, I've made a total loss of $935, which is a loss of 1.26%. Right now, the net asset of my account is $73,112.3. And as UNG, United Natural Gas closed down to $7, a decrease of 6.17%. SKQ closed down 1.02% to $25.3. The market generally closed mixed. Dow Jones Industrial Average closed down 0.42%. Nasdaq Composite closed up 0.50%, and S&P 500 closed up 0.02%. Internet content closed up 1.81%, and the auto manufacturers closed up 2.76%. On the other hand, households closed down, and personal products closed down 1.29%, and beverages closed down 2.01%. Biden will meet with the House Speaker Kevin McCarthy at 5:30 p.m. Eastern Time on Monday to continue the debt ceiling talks. McCarthy said on Monday afternoon that he believes the debt ceiling package currently under negotiation will be accepted by most House Republicans, and that both parties must reach a debt deal this week to avoid a catastrophic U.S. default that could happen as early as June 1st. McCarthy said that Monday morning discussions with White House negotiators about the debt ceiling were productive. He told reporters at the Capitol, "We can reach a deal tonight and we can reach tomorrow." But he also stressed that no agreement has been reached. U.S. Treasury Secretary Janet Yellen has previously said the United States could default as early as June 1st. Goldman Sachs, the White House, and the Republicans are expected to reach a last-minute deal to raise the government's debt ceiling, but with the U.S. stock fluctuates. Even in the face of potential debt defaults and stubborn inflation, U.S. stocks have continued to move higher recently, with technology stocks leading the way. Bank of America strategist Savita Subramanian on Sunday raised the S&P 500 to 4,300 points from 4,000 points, saying corporate focus on efficiency will make its earnings more stable, so the stocks it's not overvalued. But Michael Wilson, a prominent Wall Street short and Morgan Stanley strategist, warned investors not to be fooled into taking the U.S. rally as start of a new bull market. Wilson said there is too much fundamental and technical evidence that suggests future problems in the market. He urged investors not to get carried away in the recent rally. At one point, the S&P 500 topped 4,200 last week, the highest level since August 2022. This strategist said, "Is this the final breakthrough to confirm a new bull market?" The short answer is no. There are many technical signals and fundamental factors that conflict with this view. He noted that the U.S. stocks were overvalued, with limited types of stocks driving and defensive stocks outperformed the market. Wilson also said a solution to the debt ceiling talks could push the stocks higher in the short term. But we consider it a false bull trap. The first quarter is closed, but several big companies still report earnings in the coming days, including Zoom Video on Monday and Dick's Sporting Goods on Tuesday. There's less economic data this week, including Thursday's GDP report and personal consumption spending data due on Friday. The latter is Fed's favorite inflation data. A growing number of Wall Street asset managers seem to have reached a new consensus, saying that meeting the long-term target of the 2% inflation is a daydream. Even if the U.S. economy falls into recession, inflation will fall between 3 and 5% for many years, said Fund Bank. Invesco Asset Management said the market was overly optimistic that the economic downturn could curb price pressures. Analysts at Citigroup stressed that the U.S. inflation is almost unlikely to slow quickly amid high wage increases. On Wednesday, the Federal released the minutes of its May rate-setting meeting. The minutes could reveal Fed officials' thoughts about the possibility of a future rate rise. Fed Chairman Jerome Powell noted on Friday that the pressure on the banking system could slow the economic growth and lower demand for higher interest rates. On Monday, St. Louis Fed President James Bullard said he expects to raise the 2 or more rates this year. He thinks the Fed will have to raise its policy rate and may need to raise another 50 basis points this year. Bullard also said that the rest of the year and the basic 2022-2024 would remain relatively slow growth, and that the possibility of a recession is overstated. San Francisco Fed President Daly said on Monday that it was inconvenient to say what the Fed would take at its June meeting. The Fed will closely monitor all of the forthcoming economic data. Atlantic Fed President Raphael Bostic said the Silicon Valley Bank bankruptcy showed that the Fed's processes and policies must change to act on the demand when banks need it. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.